Hello and welcome back to Buy Now, Sell Now, and you're watching ET Now. Let's bring on the BNSN stock cloud for this morning. 10 stocks that are active for various reasons, beginning with Tata Steel. Now, numbers were very good. There's been a massive debt reduction, and the outlook from here on out is looking very positive based on what the management just said. The stock is up 7%. So that's leading the cloud this morning. We then have Phoenix Mills, which is doing very well, part of the rotation trade. If a vaccine comes, things open up. That stock has appreciated 15% in the last week of trading sessions. We then have ONGC, Eveready India, Tata Metallics on account of the merger it's going to have with Tata Steel Long Products. We then have BPCL as a divestment once again picks up pace, and it seems that there are numerous bidders still interested. Vodafone Idea, tariff hike of 15 to 20% possibly coming there. Aurobindo within Pharma, very interesting company, and possibly some levers unlocking there now that will cause a slight re-rating over there. Then we have Apollo Tyres and India Bulls Real Estate as well, with some prominent investors entering recently and outlook significantly improving from here on out. All right. Now time to talk technicals and fundamentals with our two guests. Ashish Kyal and Ashish Maheshwari are both with us. Good morning and thank you for joining us here on Buy Now, Sell Now. Ashish, coming to you first, and Mr. Kyal I'm talking about. We have a bull market currently still very much on the cards. You have improving vaccine data coming out. So, in terms of a high risk, low risk idea, will you now still be looking at some of the stocks which have done well over the past, like Pharma, IT, or are you also rotating toward perhaps more cyclical or recovery oriented stocks?
Good morning to you and the viewers. See, the overall market, which has been ongoing right now, has been on a rotational basis, and we can clearly see Pharma was the flavor about a month back. Now it has been rotating more towards the metal side. We can clearly see Tata Metals outperforming right now. And also one very interesting aspect is that in this up move, there has been mid-cap stocks have started participating lately, not initially, but now lately we have started seeing mid-cap participating. So I think it's better to pick up stock from the mid-cap space, but not everything is participating. The overall advance decline ratio, if you check the chart, have been declining. So not everything is participating over the past 1 month, and that's why it is very stock specific and sector specific movement that we can continue to see from here on. On Nifty, I think 12,900 is the level that it has to cross. We managed to open around that zone above, but we are still seeing some profit booking coming around that zone. So if we are managing to close above that level 12,900, then I think the rally can extend. But it has been nearly around 12 to 13 days since we have seen a close below the prior day low. And that's why some consolidation or relieving the overbought zone of the indicators is expected over short term. So short term, there can be some consolidation happening. And in that phase, stock specific movement can continue.
Okay, great. Thanks for that. And Mr. Maheshwari, hi. What's on your cards today? High risk and low risk idea for our viewers?
Yes, I think the point that now time has come to look at cyclical stocks instead of pharma and IT, which has rewarded investors handsomely in last year. So this year is going to be in favor of companies which are operating into metal and building products, etc. So I have identified a couple of stocks in that area only. So first, my bet is Udaipur Cement. It's just a 500 crore market cap company with 2.5 million ton plant capacity. And the way today we have seen all large cap stocks touching 52-week high in cement pack. This is again a stock which has touched 52-week high. And again, the triggers are that they are also taking an expansion of 2.5 million ton capacity more. So in a couple of years, they are going to be a 5 million ton capacity without raising too much external capital. So a lot of internal accruals are already available with the company. I have very good growth also behind this. So my target for this stock will be 25 rupees in next 6 months. Another idea which I like in steel space is Tata Steel BSL. This is a company which Tata Steel acquired, earlier known as Bhushan Steel. And if we see the last quarterly performance, In June, they did a loss of 650 crore. In September, they bounced back very handsomely with 340 crore profit. And the way Tata Steel is moving, this will be a shadow stock which will continue to do well. And they're the one which supply to all white goods manufacturer, automobile manufacturer, and very specialized steel this company is making. So with very less floating stock, because promoter holding is as high as 73%, I think this is a good mid cap idea to look at in below 4,000 crore market cap.
Okay, great, Mr. Maheshwari. Mr. Kyal, you know, we got your sense on the market, and it's clear that now both of you are thinking of a rotation towards cyclical stocks, but you never gave us your picks today, high risk and low risk, for our viewers.
Pick is going to be VRL Logistics, and the stock has been doing fantastically well with a strong momentum on the upside. Unfortunately, by the time I was about to give the stock, it was trading somewhere around 176, and I think right now it is somewhere around 181 already. So it's very near to the target, but I think any dips can be utilized as buying opportunity on this stock, VRL Logistics, keeping a stop loss of 169.50 and for the target of 184. This is a high risk kind of a trade. The next stock is going to be on the buy side, is going to be KNR Constructions. Again, it has been consolidating for quite some time between the range of 260 and 245, and in today's session we can clearly see a breakout coming out of that range. It is managing to sustain that, and if any close around 263 happens, then I think it can continue to move on the upside for the target, which is derived based on the width of the pattern. If you project it on the upside, the target comes to around 276. So one can go long on KNR Constructions at CMP, keeping a stop loss of 255 for the target of 276, again from the high risk side of a trade.
Okay, thanks for that. Now that we've got your recommendations, let's see what the viewers are interested in. We have the first query this morning from Prabhat Gogoi, and he's bought 340 shares of IOC at 87 rupees per share. He'd like to know if he should add more or exit. So, you know, Mr. Maheshwari, coming to you first, what's your verdict on an IOC?
See, IOC is passing through a tough phase, though they are now working at 100% capacity, but their GRMs are at all-time low, and which are quite unsustainable ones. So we are not going to see good improvement in profitability as far as GRMs are concerned. Until the time GRM doesn't improve, then we are going to see pressure in the stock. And another story which was of BPCL divestment, which was going to help IOC valuation also, I think it's going to take some time. So my suggestion will be for 2-3 years time frame, you are having plenty of more options in large cap space where you can make more money and quickly you can make money. So my suggestion will be, instead of IOC, why don't we look at Indian Hotels, which is available at 115 rupees, and with revival in travel and tourism in this year, I think this is a stock to watch for, and it can give you almost 50% kind of upside in next 1 year. So my suggestion is not to invest in IOC at this price.
So couldn't get any clearer from you. Exit IOC, look at better stocks like Indian Hotels. Mr. Kyal, do you concur with what Mr. Maheshwari just said?
Yes, that is more from a positional perspective. I think he is talking about more from the investment perspective. From a short-term trading perspective, I think he can hold on for the existing positions. Fresh positions, he should avoid adding more at this level, which I completely concur. But for existing positions, he can hold on with a stop loss of 83.70 and then expect a target of around 88. This is from a short-term trading perspective, since he bought at 87, which is little on the higher levels that he has bought. I think he should be able to get out around 87 or 88 levels once we start seeing some positive move, but maintain a stop loss of 83.70 on the downside.
Okay, so cautious stop loss there from Mr. Kyal. Maybe you can get out at the same price. So that's interesting. Two slightly differing views on the stock. But let's go to query 2, which is from the same viewer, but it's a different stock, obviously. And Prabhat has also bought ITC, 300 shares at that, and at 227 rupees per share. So slightly higher prices than where it's been recently. Is it advisable to hold for 2 to 3 years? So, Mr. Maheshwari, coming back to you, ESG seems to be ITC's biggest problem. Do you see incremental upside coming in here, or should he exit?
Incremental upside can come, but it will be very gradual. In fact, if you see last 1 year performance of ITC vis-a-vis the peer set, it is a laggard because still people are not convinced with the kind of growth that FMCG will bring. Is it sustainable, or whatever the underperformance is there from other segments? How much compensation, how much it will compensate as such. So this is the reason why. In spite of this quarterly numbers, etc., also stock is not moving. So my suggestion will be, again, in this year, instead of looking at ITC, why don't you look at Ambuja Cement, which is again at 50-week high though, but it has got very good potential to go up from here, because the way demand is increasing for cement, particular products, and then the quarterly numbers are coming in. In my view, this is a stock which even can touch 400 rupees in next 1 year time. So my session will be to exit from ITC and shift to any cement good stock.
Okay, again, very clear instructions from Mr. Maheshwari. Exit and look at Ambuja. Mr. Kyal, what about you? Does ITC have a possible near-term spike in it before he looks to get out, or what's your read on this?
Yes, see, the way I'm looking at ITC, it is formed a very strong base around 160 to 165 levels based on the technical charts. And this stock has not yet participated the way the other stocks that we can see have participated in the rise. But there is a potential that we can start seeing some consolidation for a few months. I'm not ruling that out. Post that consolidation, I think ITC can outperform, because FMCG as a whole pack can start the outperformance in this rotational buying that we have witnessed. So ITC, my stand would be that if he has the position, he can hold on to the position, keep a stop loss of 160. It's far away because we are talking about from a long-term perspective. Keep a stop loss of 160, and I think we can expect a target of around 240 to 250 from 2 to 3 years perspective. So that is possible, but do not expect any magical trend to emerge immediately right now. It can consolidate. It might take time. It needs to form a base, and then eventually it should outperform.
Okay, great. So again, slightly opposing view from both our experts, but a big thank you to you both for joining us this morning. It's been a pleasure. We look forward to having you back on the show sometime in the near future.